Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from TheTechnicalTraders.com. Welcome back to the show, Chris.
Hey, thanks for having me, Jim.
What an unusual day for the precious metals and copper. Basically unchanged across the board. Is that the kind of market we've been looking at? Nothing wants to move in any direction?
Yeah, it's really been like that the markets have been struggling for quite a few weeks. The last 2 weeks in general, we've seen the large cap stocks really struggle. The last couple of days we've seen these, the FOMC meeting, the Trump and tweeting. We've seen some pretty wild price swings in equities and commodities, and the dollar continues to climb. It's been a real mixed kind of market, and not a whole lot has really taken place in the last couple weeks, really. Everything's kind of been chopping around very randomly. And precious metals had a beautiful pop today. Gold kind of recovering from a big drop it had about a week and a half ago. And, all the metals and everything has been pretty dormant in the grand scheme of things. Just random news is moving these things in random price action. It's a tough trading environment the last 2 weeks.
So people looking at precious metals, can they expect a rise from this? Is this the bottom?
It looks like, in the grand scheme of things, as an investor, if you step way back in time and look at precious metals, whether it's gold, silver, or a basket of them, it looks like we're in a major long-term investing kind of opportunity here for precious metals. And considering the strength of the dollar that we've seen in the last month, precious metals have actually been holding up very well, if not some of them actually moving slightly higher. So in the grand scheme of things, yes, I think this is a buying opportunity for an investor for precious metals. Do I think it's going to break out and rally in a huge way tomorrow? Not so much. I think precious metals are going to start to firm up here and start to rally with equities. I just don't see a huge explosive move taking place anytime soon, but I do feel as though they are going to start performing very well with the overall broad equities market. And when that starts to happen, that's usually a sign that the major indexes are getting ready to roll over. And when the gold mining stocks are outperforming continuously over the equities market, that'll be the real signal that you got to be very wary of what sectors you get into in the stock market and your overall long-term position, because I think the markets this year or very early next year will be rolling over and starting a full-fledged bear market for equities.
The whole problem is trying to time that, because the little greed monkey is always sitting on your back saying, we can squeeze a little bit more out of this.
Yeah, for sure. And that's the tough part. Major trends, especially a trend that's lasted 10 years plus, it's not something that you just one day you see the signal, we're in a bear market. It actually takes months for a bear market to happen. We actually have to see a big decline in equities, 15, 20% in equities, before technically it's really a confirmed bear market. So, everyone always wants to short near the top or get out at the top, and as soon as it's a bear market, they want to ride the whole thing down. Well, unfortunately, trading doesn't work that way. You don't know you're in a bear market until there's already been a lot of selling, major levels have been broken, and a lot of things have to happen for the tides, the trend to change. And that's going to take months. Even if the top of the stock market is already in, we might not be confirmed in a bear market for months of selling still. So, it's when you're looking at long-term trends, you've got to step back and look at the big picture, especially usually the weekly or the monthly chart for a visual to get an idea of how far you likely are away, at least 3 months, 6 months, 12 months away. And that's how you really have to try to attack the markets when you're trying to trade with a bull market or bear market. Swing trading, obviously totally different game. You could be long one day or 1 week and short the market the next week to play the monthly gyrations. But definitely tough to try to time a bear market and a bull market top and bottom.
What about all these companies sitting on stacks of cash wondering what to do with it? The S&P saw record buyback levels last month. Do we expect to see the same thing happen again?
I think we will. I'm proposing that we're going to see a very big, a major leg up in the stock market. I think we could see a very big rally going forward several months, and I think it's going to catch a lot of people off guard. And then it's going to get, we're seeing huge buybacks. We're going to start to see insiders buying back. Investors are going to start piling their money in, and we're going to get to that euphoria stage where we get capitulation buying. Everybody gets into that greed buying, that the market's running away. It's starting another major rally, and everybody's going to pile in, and it's going to create a huge rally that could last months. And that's what happens is everybody gets comfortable. They start buying shares, and it becomes a feeding frenzy. And it's going to be what's happening to the underlying technicals. Are certain sectors doing most of the lifting? And are there some, which sectors are leading the way lower while the rest of the market is going up? So we are now into more of a stock pickers market. We've been trading the tech sector. The transportation index is on the verge of a beautiful breakout and rally, much like the energy sector was about a month and a half ago. So it's really, you have to pick the sectors now. The bull market, the easy money bull market to me is more or less over. Now you've got to identify the hot sectors, move into them, and play them more aggressively than just picking the broad market, because anyone who's been in the Dow, the NASDAQ, SP 500, it's been trading sideways or down for quite a few months here. You go and you look at the transportation index, the small cap stocks. Well, they've been rocketing to all-time highs because a strong U.S. dollar doesn't affect these small cap companies so much. The multinational companies who are priced in U.S. dollars, sell their services globally, well, the U.S. dollar keeps going up. All the other currencies seem to be falling in value, meaning, these large cap multinational companies, their services are becoming way too expensive for others to buy, and that's why large caps are pretty much stopped dead. They're kind of holding there. So there's a lot going at play here, and the dollar is definitely hurting the large cap market right now.
We'll have more with Chris Vermeulen right after the break.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Chris Vermeulen. Speaking of the U.S. dollar, we're seeing currency crises in Venezuela, in Argentina. Now Pakistan is asking China for help. Does that make people run to what everybody refers to as the senior currency because they believe it's more stable than anything else?
For sure, yeah. Right now there's a lot of issues going on globally, and there's currency issues. Obviously, money is flowing out of those currencies, losing value. If a currency just continues to drop, people are going to naturally want to move to a currency that they think is more stable or that is rising, which happens to be the U.S. dollar. The Canadian dollar has been actually holding up really well. It's been kind of trading sideways while the rest of the currencies have been more or less falling in value. And that's the same with the equities market, if you go and you look at a lot of other different country stock indexes and stocks in general, there's a lot of major countries they're in full-fledged bear markets with their equities. And so money is flowing out of those countries, those equities, and they're going to be moving into other things like U.S. dollar, which is why I think it's rising now, is all that fear is moving to the dollar as the safe haven. And as that money moves and gets transferred into U.S. dollars, they're going to start looking to invest it in U.S. equities. And I think that's going to be one of the big pushes of the equities market back up, is everyone's loading up with U.S. dollars, and I think they're about to start to buy U.S. equities.
Going back to the Canuck buck, the TSX had an 11-day straight rally, something that's very rare. Does that indicate the Canadian Stock Exchange is just as strong as the U.S.?
Yeah, well, the TSX has been doing really well. It's put in a nice double bottom formation. It's been rallying up to near the highs that we saw back in January, and it's usually a sign when the TSX is starting to rise. It's a sign that commodities should be firming up and bottoming. Obviously, the Canadian Stock Exchange very heavily weighted with oil, energy, resources, metals. And I think it's a leading sign that money is moving to physical assets like commodities and companies related to those. So it's a very good sign that resource stocks should continue to move higher, and that big money is moving into that kind of area. So usually we see resource stocks move first, and then we start to see the physical commodities themselves start to rally.
Canadian financials also doing well. Second quarter results now coming in for the big Canadian banks. So far, so good, better than good for many of them.
Yeah, I don't follow too much of the Canadian financial sector, but yeah, very strong numbers for sure.
We'll have more with Chris Vermeulen right after this.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, on the crude oil front, there were two court decisions in favor of the Kinder Morgan pipeline between Edmonton and Vancouver. Today, that's, I believe, the 15th or 16th time the courts have ruled in favor of the pipeline company, but the court challenges continue. Does this, even though the court decisions have been all positive so far for the pipeline, are investors nervous about the Canadian crude sector because the pipeline seems to be stuck in limbo?
I'm sure it keeps a lid on things of markets potentially running away, investors getting overly excited. I don't know how directly it really affects it, other than for sure, if with the whole pipeline, man, that has been dragging out forever. And, it feels like it's getting closer, but it's still, stuck in that whole kind of limbo mode, as you were saying. And until there's a real direction, I don't think we're going to see huge money and investors kind of flow to that area. So I think once there's a decision made, I think we're going to see smart money quickly move to the companies that would benefit the most from that. And I think companies in general might, depending on how they're situated with the pipeline, if it benefits them or not, it's definitely going to free up cash. We're going to see huge amounts of money flowing back and forth for the energy services and all that stuff if it gets put together. But the energy sector continues to climb very well. We've seen the XLE, the energy sector, break out of a pattern pretty much in early April, and it's had a huge rally to new highs. And the whole crude oil energy sector, they've all pulled back the last 3 days to a critical support zone, and are oversold. and they're still in a very strong uptrend, and it looks like they want to continue to go higher.
Geopolitical situation, always an impact on oil. And the Middle East, it seems every time they get closer to peace, something happens to blow everything up again. Does that keep the price of oil up?
Yeah, naturally, to me, oil has got this, it's just kind of got this calling. You look at the charts and you put out the analysis, nothing related to media or OPEC or all that. The market looks like, the price chart looks like it wants to go to 74, 75 a barrel. And we've been talking about this since more or less the February low that we saw put in, the reversal there. And to me, it just looks like that's where the market wants to head. Obviously, there's a lot of talk going on, and OPEC rules, all that stuff can change. But in the grand scheme of things, I don't really pay any attention to it because it's all more or less BS, and nobody knows what the outcome is going to be, so there's no point in trying to trade it. And I just follow the price and stick with what the market is doing.
Chris, thank you so much for chatting with us.
Hey, always a pleasure, Jim. Thanks for having me on the show.
My guest has been Chris Vermeulen from thetechnicaltraders.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our popular YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.